Welcome to Capital Luxury, the show that takes you on a journey into the world of high-end investments and exclusive opportunities. I'm your host, Ms. Luxury, and today we're diving into the realm of wealth accumulation through unconventional means. From aged whiskey to private equity, we'll explore a range of lucrative options that the ultra-wealthy turn to in pursuit of higher returns. So sit back, relax, and let's embark on this luxurious adventure. Whiskey and wine. Our first stop on this capitalistic voyage takes us to the world of whiskey and wine. Rich individuals have long recognized the potential in investing in aged whiskey and investment-grade wines. These alcoholic treasures can appreciate in value over time, often providing higher returns than many stocks. Their limited supply, coupled with increasing demand from collectors and connoisseurs, creates a market where the finest vintages and rarest spirits can fetch exorbitant prices. However, it's essential to navigate this market carefully, as trends and tastes can shift. These beverages possess an inherent scarcity due to their aging process and limited production quantities. As time goes by, the supply diminishes, while the allure of aged spirits and fine wines only grows stronger. Additionally, their cultural significance and prestige make them highly sought after by collectors and enthusiasts worldwide. This combination of scarcity and demand has proven to be a recipe for substantial returns on investment. Take for instance the Macallan Fine and Rare Collection, which comprises some of the rarest and most valuable single malt Scotch whiskies. In 2019, a bottle from this collection, dating back to 1926, sold for a staggering $1.9 million at auction. Such extraordinary prices showcase the immense potential for wealth accumulation in this market. Collectibles. Our next stop brings us to the world of collectibles, where rare books, comic books, toys, stamps, coins, sports memorabilia, sneakers, and trading cards have captured the attention of affluent investors. These items can increase in value if there is demand for them. But as with any investment, caution is advised. Collectibles hold a unique appeal for investors. They often evoke a sense of nostalgia and passion, making them highly sought after by collectors. As demand rises and supply becomes scarcer, the value of these items can appreciate significantly. However, it's crucial to approach this market with caution, as trends and fads can shift quickly. In-depth research, understanding the market dynamics, and seeking expert advice are crucial to making informed investment decisions. Luxury watches. Luxury watches and purses have long been coveted by collectors and enthusiasts around the world. These highly sought-after items not only serve as functional accessories, but also represent symbols of prestige, craftsmanship, and exquisite design. In recent years, the demand for luxury watches and purses has reached unprecedented heights, leading to a surge in the market and the emergence of exclusive channels for their acquisition. One of the key factors that contribute to the allure of luxury watches and purses is their limited supply. Prestigious brands such as Rolex, Patek Philippe, Hermes, Chanel, and Louis Vuitton intentionally produce a restricted number of their most desirable models or designs. This scarcity drives up the desirability and value of these items, making them even more covetable among collectors and affluent individuals. To cater to the demand for these limited edition pieces, luxury brands often employ exclusive distribution strategies. They establish relationships with select authorized retailers and boutiques, where customers can have access to these highly coveted items. Some brands even create waiting lists or invite-only events, further heightening the exclusivity factor. These specialized channels provide a sense of privilege and status to those fortunate enough to secure these sought-after items. Investment tips. Diversify your portfolio. Spreading your investments across different asset classes, such as stocks, bonds, real estate, and commodities, can help mitigate risk and potentially enhance returns. Diversification reduces the impacts of a single investment's performance on your overall portfolio. Invest for the long term. Successful investing often requires a patient and long-term approach. Short-term market fluctuations are normal, but historically, the market tends to grow over time. By staying invested for the long haul, you can benefit from compounding returns and ride out temporary market downturns. Understand your risk tolerance. Every investor has a unique risk tolerance based on their financial goals, time horizon, and comfort level with volatility. Assess your risk tolerance honestly and align your investments accordingly. Conservative investors may prefer lower-risk assets, while those with a higher risk appetite might consider more aggressive investment strategies. Stay informed and seek professional advice. Stay updated on market trends, economic indicators, and the performance of your investments. Financial news, research reports, and expert opinions can provide valuable insights. Consider consulting with a qualified financial advisor who can provide personalized guidance based on your specific circumstances. There you have it, folks and friends. Investments you are missing out on. Investing is a journey that requires patience, discipline, and a commitment to ongoing learning. By staying informed, adapting to market changes, and regularly reviewing your portfolio, you can make informed decisions and work towards your financial goals. Remember to subscribe and like this video if you want to have a step ahead than your peers. Stay tuned for more, everybody!